Today, FG New America announced a reverse merger with Opportunity Financial, or OppFi as it's called. Stock is expected to trade on the New York Stock Exchange under the ticker OppFi. The deal to close by the end of the second quarter of 2021. OppFi is a financial technology platform that provides access to credit for consumers. Joining me now, the man behind the SPAC, Joe Moglia, former chairman and CEO of TD Ameritrade. Joe, good to see you. Now, you told me this morning when we were talking about this that what attracted you to this company is that nearly 60 million consumers lack access to mainstream financial products, and OppFi provides those services. What is it doing?
That's right. I mean, there are 60 million. It's unbelievable. 60 million people in the United States that literally live paycheck to paycheck, don't have access to credit, and when they need to pay, fix a car, replace a window, pay a medical bill, buy books for school, they struggle to be able to do that. So what OppFi tries to do is it does everything it can with its platform, which is incredibly scalable. They got greater capacity than that to reach out to the individuals that have both the ability and the willingness to be able to pay. And when they can do that and they're successful doing that, they actually increase the quality of life of these families. So that was something that very much drew me to it, as well as I think they've got an incredible management team that we would want to work with.
I've known you for so many years. Of course, at TD Ameritrade, you were a great help to me as a reporter many years ago, and now you're in the SPAC business. So what's amazing to me, Joe, is the market is just saturated with SPACs. This year alone, Joe, 133 SPACs have raised $40 billion versus 23 IPOs that have just raised $17 billion. SPACs are overwhelming the world. Where is all this new money coming from, Joe? And aren't you concerned at all that this is way too many companies going public too fast?
Well, I think we just have to put this in perspective, Bob. Now, I know the market is saturated, and I recognize there's a lot of criticism. And some of that criticism is very fair. So in terms of the stats, at least that I have, you go back to the beginning of last year, and as of February 5th, there were 366 SPACs that became public. Now, especially for the retail investor that's watching the show, that's a shell. And the whole objective of that SPAC and that IPO is to wind up with a merger candidate somewhere down the road. Most of the SPACs will not be successful. Then at some point, when they do have a merger candidate, there is an announcement. Then the key with that announcement is who the SPAC's actually going to merge with. Because by the time it closes, the SPAC disappears, doesn't exist, and then the company's got to be able to stand on its own. So as an individual investor, you've got the opportunity to trade and get involved between IPO and announcement. But when you get to the announcement, then you've got another 3 months to do your research on the actual firm and decide what's going on. So think of it more in terms of there may be a lot of people out there trying to do it, but not that many people are getting it done successfully.
Yeah, and of course, the key is the optionality, as you mentioned. That seems to be what everybody is in love with. You can always back out of the deal if you don't like it. Joe, I got to move on here. I want to talk about Robinhood and about GameStop. Yeah. And what about that Reddit crowd? Short trade is fading in GameStop and everything else. But what about the long-term fate of the Reddit traders? Now, you ran TD Ameritrade. Can we turn these excited young investors into long-term investors? And how can we do that? How do we keep them?
Well, I think over time, each investor has to decide what he or she needs for themselves. So that can take place. That takes place over time. I think the reality, as great as that short squeeze was, and I give credit to the people that led it, I think the real thing we've got to take responsibility for is what happens when the trade turns around? What happens when they start to sell and the market's coming down? You need to have better education and communication so you understand that. So if you understand what leverage is, because there's great on the way up, it can kill you on the way down. If you understand in times of great volatility, there's a chance that trading might be halted. If you understand that, if you recognize a bear market's totally different from a bull market, you've got a better chance of being able to manage your risk, do a better job, learn more, and I think from there you can progress more into the long-term investor. But I think it's the brokerage firm. I think it's the individual investor. And the social media groups, they got to take responsibility for that.
Joe, I need a short answer on this. The question is, they're not going to go out and open Vanguard accounts with these young kids. They're going to want something else. Can we keep them in like a separately managed account? What is going to hold them in there? Can we open new businesses that are robo-advisors or new opportunities? I just don't want them to leave angry and saying, oh, the game doesn't work for us anymore. I want to keep these people.
Well, I think they're not going to leave angry, Bob, if they understand what's going on. Like if they can do a better job of managing their downside risk, and then over time realizing how critical, they're going to have trouble going through a bear market. So they need to realize over time exactly what that means in terms of what their long-term goals are. As they start to understand that, they will start to shift from somebody that day trades all the time to maybe somebody that's a trader, but also thinks in terms of long-term investment. Yeah. I think it takes place over time, and it's a matter of education.
Shepard Smith here. Thanks for watching CNBC on YouTube.